Hello everyone. Today I'm going to tell you a story you've probably never heard before. This is the story of money, but it's not just about cash and coins. This is a story about power, debt, and gold. Have you ever wondered what came first? Gold, silver, or something else entirely? And the paper money we use today? Where did it come from? Is it backed by gold? No. So what gives it value? In today's video, we'll discover how debt replaced gold, and this journey spans 5,000 years. So, without wasting any time, let's get started. First, let me shatter a myth that's written in every economics textbook. We've been told that initially there was a barter system where people exchanged goods directly. Then, due to the inconvenience of barter, money was invented, first in the form of coins made of gold and silver, then paper money. But friends, this is a lie. David Graeber, a famous anthropologist, proved in his revolutionary book, Debt, the First 5,000 Years, that before money, there was debt. Yes, that's right. In Mesopotamia, around 3,500 BC, when writing was invented, the very first things recorded were debt records. Ancient Sumerians wrote on clay tablets things like, Ahmed owes 5 bushels of wheat, or Sarah has borrowed 3 goats. These were credit systems, existing thousands of years before money. Graeber explains that human societies have always operated on mutual credit. You would take something from your neighbor and return it later. Communities ran on trust, not on gold. So, where did coins come from? When did gold enter the picture? Around 600 to 700 BC, in Greece, Turkey, and China, coins were invented for the first time. But listen to this. These coins weren't created for trade. Graeber's research shows that coins were made to pay armies. When empires expanded, they needed soldiers. How do you pay soldiers? The king thought, I'll make metal coins, give them to soldiers, and then impose a tax that must be paid using these coins. It was a brilliant system. Soldiers used coins in markets, local people needed coins to pay taxes, everyone started using coins, and this became currency. Gold and silver coins became powerful because they were rare, durable, divisible, and controlled by kings. Now let's come to Niall Ferguson's perspective. In his famous book, The Ascent of Money, Ferguson argues that the real power of money lies not in coins, but in credit and debt. In Renaissance Italy, the Medici family developed the banking system. They issued paper IOUs, written promises that said, I will pay you. These papers became tradable. One person could sell them to another. This was the beginning of modern banking. In the 19th century, a new system emerged called the gold standard. This meant that every currency note had to be backed by actual gold. A £1 note equaled a fixed amount of gold. Governments promised that you could bring in paper notes and exchange them for gold. Ferguson explains that the gold standard gave a massive boom to global trade. Why? Because it provided stable exchange rates, predictable prices, and international trust. The British Empire kept the pound, sterling, gold-backed, and the whole world accepted it. But every system has problems. In 1914, World War I started. When the war began, countries needed massive amounts of money for tanks, guns, and soldiers. But gold was limited. So all countries suspended the gold standard. They printed unlimited notes without gold backing. The result? Hyperinflation in Germany, economic chaos, and people carrying wheelbarrows full of notes just to buy bread. In 1944, as World War II was ending, 730 delegates from 44 countries met in Bretton Woods, New Hampshire. Their mission? To create a new global monetary system. The decision was made. The US dollar would become the global reserve currency, with $35 equaling 1 ounce of gold at a fixed rate. Other currencies would be pegged to the dollar, and only the US government would promise gold convertibility. America had the biggest gold reserves because after the war, the entire world had given them gold in exchange for weapons. So the dollar became as good as gold. But how long did this system last? In the 1,960 seconds, America fought the Vietnam War, engaged in the space race, and funded expensive social programs. The problem? America printed too many dollars, but didn't have enough gold to back them. France and other countries realized that America didn't have enough gold for all the dollars in circulation. All countries demanded to exchange their dollars for gold. The 15th of August, 1971, was a historic day. President Richard Nixon announced on television that America would no longer convert dollars to gold. This one decision changed the entire global monetary system. Now, The dollar was no longer gold-backed, no currency was backed by gold, and the era of fiat money had begun. Fiat means money whose value is based only on government promise, with no physical backing. Ferguson calls this the end of commodity money and the beginning of pure credit money. Now, money is simply an IOU, a promise, a debt. Today's system is 100% based on debt. Let me explain how it works. Step 1. The government needs money for roads, hospitals, and the military. Step 2. The government issues bonds, which are promises saying, I will pay you back with interest in 10 years. Step 3. The central bank buys these bonds, but with what money? By typing numbers into a computer. Money is literally created out of thin air. Commercial banks do the same thing. When you take a loan, the bank doesn't actually give you existing money. It simply adds numbers to your account. These numbers equal new money that was just created. Graeber states that 97% of money in circulation is created by banks giving loans. This means your salary, your savings, everything is basically debt. Think about it. 5,000 years ago, we had community debt and credit. 2,500 years ago, we had gold coins. 100 years ago, we had gold-backed paper. Today, we have pure debt in the form of digital numbers. Debt has completely replaced gold. But every system has problems. Problem number 1 is unlimited debt. When money was gold-backed, there was a limit. Now, the U.S. national debt is over $34 trillion in 2026. Will this debt ever end? No. Problem number 2 is inflation. When too much money is printed, prices rise and your purchasing power decreases. Your $100 today is not equal to $100 10 years ago. Problem number 3 is financial crises. Ferguson analyzed the 2008 crisis where banks gave unlimited loans, people couldn't afford to pay them back, and the system crashed. Graeber used to say that debt has become a form of social control. Today, every country, every company, every individual is in debt. Student loans, credit cards, mortgages, car loans. It's a debt trap. So what's the solution? Some people say we should go back to the gold standard, but this isn't practical because the world economy is too large and there isn't enough gold. The second option is cryptocurrencies. Bitcoin was created in 2009 with the idea of no government control, no unlimited printing, a fixed supply of only 21 million coins, and complete decentralization. But governments have also made their move. Central bank digital currencies, or CBDCs, are being developed. China has the digital yuan, Europe is working on the digital euro, and India is exploring the digital rupee. These are digital but government-controlled. Ferguson says we're witnessing another monetary revolution, from physical cash to digital tokens. So friends, what did we learn today? First, money wasn't invented because of barter. Debt existed first, as David Graeber showed us. Second, gold coins didn't come for trade, but to pay armies. Third, the gold standard was the backbone of global trade in the 19th century, but the world wars destroyed it. Fourth, the 1971 Nixon Shock ended gold backing and began the era of fiat money. Fifth, today's money is 100% debt-based, created by banks and backed by promises. Sixth, the future is uncertain. Will it be Bitcoin, CBDCs, back to gold? What will happen? Niall Ferguson and David Graeber both agree on one thing. Money is ultimately about trust and power. First, there was trust in the community, then trust in gold, then trust in governments. Today, trust is in banks, governments, or blockchain. You tell me. Friends, if you enjoyed this video, please like, share it with your friends, subscribe to the channel, and hit the bell icon. Tell me in the comments what kind of money system you want for the future. Should gold come back, or is Bitcoin the future? Or is there another solution? I'll be waiting for your comments. And if you want more videos on historical and financial topics, definitely let me know. See you in the next video. Take care.